This presentation is going to focus on group insurance. You can check in section 6.1 of your life insurance module if you're looking for some more information. We are going to start off with those three things that will help you remember what group insurance is all about. The first is that group insurance is provided by a company or some sort of organization or association, whether it's an alumni or a business or occupational. And the people who are members of this group plan do need to have some sort of a common interest outside of just wanting to have insurance. So whether you work for the same company, you're an alumni of a university, or you are part of an occupational association like physiotherapy or naturopathy or the Teachers Association. These benefits that are received by the members are received tax-free. So that is a really great benefit of group plans. Now, the master contract, that's between the policyholder and the life insurance company. And now the policyholder could be, is also considered the plan sponsor, the employer, the group itself. There are quite a few different terms that are used to refer to who the policyholder is. It is important to remember they are just all the same. They're talking about the same person or same entity. There is no contract between the member and the insurer. So if you're an employee at a company, you do not get a contract with the group provider, the group insurer. Now, how do you become a member and get membership in one of these group plans? And the most common way really is that you are an employee of a group at a place who has a group plan. And there is some eligibility criteria that is required. So whether it's that you're actively at work, and this is because if you're at work, then you're likely to be in reasonable health. Maybe you need to be in good standing, or you have to have your membership up to date if you're part of some sort of organization or association. There are some things with membership that are important to know. So the probationary or waiting period is the time until a member can join the group plan. And that normally is around 3 months. So during the first 3 months that you are employed, you cannot join the group plan. You do have to wait for that 3 months to pass. The enrollment and eligibility period is the period that starts immediately after the waiting period, and the member must join the group plan during this time in order to not have to provide evidence of insurability. Now, it is possible they'll be able to join after, but they might be required to provide evidence of insurability. There can also be membership classes, and these membership classes are usually based on your position in the company. So the higher position you have at a company, you might actually have access to more benefits than somebody else who's not considered as high an executive. The last thing to remember or the last thing to know is that dependents can be covered under these plans as well. So a dependent is a spouse, a common law spouse, unmarried children between 14 days old and a maximum age, which will be in the group contract. And often if that person is in school, it extends the max age a little bit longer. Now, premiums are different than individual insurance. They are actually based on the entire group composition and not an individual member. So that means that what does this group look like? Is it primarily females in their 20s? Is it primarily males and females in their 30s? Is it a mix of older people sort of over 65 and then some younger people under 35? So this is what comes into play for the premiums and how the insurer figures out what the plan is going to cost. The insurer can adjust the premium annually, and that's based on the group activity for the year. So if they're finding that the group activity is quite substantial, they can adjust the premium according to that group activity. And there are a couple different types of plans that can be set up by the policyholder. A contributory plan or a non-contributory plan. And now the first one, contributory plan, the member pays part of the premium. So it's deducted from their pay directly. It's collected by the company in this example, and then the company will submit those premiums along with their part to the insurer. The second does not require the employees or the members to pay any of the premium, and the plan holder pays the entire premium. Whichever situation, the plan holder always has to pay part of the premium. Regardless of whether it's some or all, there is some requirement by the insurer that they pay for something. Now, there can be a premium increase for older and retired members, and so often we'll find that plans have a max coverage amount for these members, so that way the policyholder and the members are not paying too much for the coverage. Now, CHAL guidelines require that premiums are waived and coverage does continue if there is a disabled member. So it doesn't matter what the contract status is in that situation. It could be possible that the contract is canceled and no longer enforced, but the disabled member will continue to receive those benefits. Now, depending on the contract, there might be a specified time that those benefits could end. So it's really important to make sure that if you do have a client in that situation, that you do read that contract. The tax treatment of these policies is very straightforward. The death benefit is tax-free, so that's what we were talking about earlier. The beneficiary receives that tax-free. The plan holder premiums are tax-deductible for the holder. So that's, for example, the company has a tax deductible for the premiums. They are a taxable benefit for the member, so in the employee. So that this will be included in the member's T4 slips as a taxable benefit. The member premiums are not tax deductible for the member, and that's because, remember, you are getting that death benefit tax-free, so they're not also going to allow you to have a tax deduction on the premiums. Now, premiums are subject to a few different taxes: the insurance premium tax, the provincial retail tax, and HST or GST, and that's specifically on administrative fees. Now, the first insurance premium could be around 2 to 4%, and the provincial retail could be around 6 to 9%. That's all we're going to cover in this first presentation. If you're looking for some more information, do check out the next presentation, which is all the ins and outs of group insurance, and we really dive into a lot of different things in that presentation.